What's my millionaire investing strategy? I'm Nate. I'm the Fit Future MD. Upload every Monday, Wednesday, Friday. Pick up the free copy of the nutritional workout guide in the description below. I'm currently down 43 pounds. And if you're interested in how I did that, pick up that free copy of the nutritional workout guide. I'm the owner of InserSale. InserSale is family. Together we rise up from humble beginnings to inspire others all over the world with the messages on our t-shirts. Wear your inspiration today and pick up the difference maker drop out right now. Use code FitFutureMD for 20% off. So the market has gone through, kind of a recession-like drop as far as the stock market, right? And the government is basically trying to raise money right now using bonds, right? Treasury bonds. So they're offering a solid 5%, basically no risk in treasury bonds. Now, and that has literally made people just rush into treasury bonds, right? Because you basically can earn 5% and what they consider to be no risk, right? In the meantime, you got these credit agencies, downgrading the U.S. government and their debt borrowing abilities, right? Basically saying that they're, borrowing money at uncontrollable levels, right? That also has to deal with who are they borrowing the money from. We don't really owe any money to that many foreign people. We basically owe money to ourselves, right? So the ones that buy the bonds, right? 10-year, 20-year treasury bonds. So it's all about when that debt is due and how much that debt was borrowed for, right? So, but those payments have definitely gone up, because, they're doing bonds at 5% now, right? So just keep that in mind. So all this stuff, this is what the news is telling, this is what the news is pushing, like recession. Should that even matter to your investing strategy? It really should not, right? Your investing strategy should still be the same. I call it the unicorn strategy. But, you're basically trying to find that company that's a good company, but just happens to be down because that market is down, not because they have a fundamental problem with their product, right? So, they've raised interest rates in the housing market, right? That's caused people not to be able to afford to purchase homes, right? You don't have people constantly refinancing their homes, right? And that business is a high fee business, right? So you get a lot of money up front and the government buys up the stuff, Fannie Mae and Freddie Mac, they buy the stuff. They basically guarantee the loans and buy it up, right? So, that being said, the banking system is way down because of that, right? But some banks did stupid things, right, during the pandemic. So what I call the unicorn is to find the bank that did not do the stupid thing, that's just down because the rest of the banks did stupid stuff, right? Like lend out money 100 to 1, 200 to 1, 300 to 1, 1,000 to 1, instead of keeping it 10 to 1 like the law pre-pandemic was, right? So, that's the shadow banking system or whatever you want to call it. But, say all this stuff is, all that stuff on the news is minutia, right? It's all there to get you to react a certain way right? And, they're all pushing the same agenda, recession, 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 or whatever, to get you to change behavior, right? They get the retail investor to do something that they want them to do, while the institutional investors continue to do their strategy, whatever their strategy is, right? So if you look at Warren Buffett and Berkshire Hathaway, what did they buy? They bought bank stocks. They bought petroleum stocks. They bought construction stocks, right? All these areas are down because of the high interest rate. So, but those businesses are still good businesses, and they will survive any long-term recession, through the market. And they've basically been pulled down. They've been pulled down because, that market had people doing stupid stuff, right? So that's what I'm looking for, right? And, I'm thinking about coming out with, some kind of, sheet, basically, how I pick things. But I also want to mention, Dave Ramsey in here, right? Because he's basically saying, not to invest while you're paying off debt. Well, I disagree with that. And the reason I disagree with that wholeheartedly is because of student loans, right? So, I work for a municipality, and, so far, I've worked there 6 years. So in 4 more years, all my federal student loans will be forgiven because I work for a municipality, right? It would be dumb for me to pay extra payments on something that's going to be forgiven, right? And then, so what do I do with that extra money? I invest that extra money, right? Now, did I borrow that money intending to repay it? Absolutely, 100%. But the market conditions for when I graduated did not allow me to do that, right? So, I ended up having to get a municipal job. That's the best job I could get. And, so I ended up not paying those, right? But, his principle says to pay off all your debt before you start investing. Before you buy a house, pay off all your debt, right? And now that the interest rate is up, the pay off all your debt before you get a house is probably going to have to be actually there, right? Because you're not going to qualify with other debt, in a average American salary, right? If average American salary is $60,000, and say you got a husband and wife doing that, so that's 120. You are barely affording, at 120, you're barely affording, that $500,000 house, which is what the median cost of housing is now, right? So you're not going to be able to have debt and own a house, right? So most people are going to stay in debt and rent. Rents are going to go through the roof. We all know this, right? Inflation has to go, eventually inflation catches up everywhere, right? So if they raise interest rates, when the owner of these properties refinance, that is when, you'll see rents start to go up, right? And some people locked in 30 years, and that's great. And, if you got one of those situations where you're in an apartment and, they're locked in, or their apartments are paid off, or whatever, that's great. And, you may not see the big spike in, stuff like that, but, it's going to have to catch up eventually, right? But all this is to say that you don't change your investment strategy based on market conditions, right? Now, someone gave my father-in-law a tip on Bitcoin, right? Or, basically saying like over the next 14 months, Bitcoin's going to go crazy because the market's going to go down, right? And also, they've approved the ETFs for Bitcoin and for Ethereum and all that kind of stuff, right? So, but all of that is speculation, right? Bitcoin in and of itself has no use. There's no intrinsic value to Bitcoin other than what people create it to be, right? So, as of right now. Also, you still have the chances of these FTX situations because they have not regulated Bitcoin like they should have, or cryptocurrencies, right? They have not regulated them appropriately to actually consider them an investment, right? Now, I hope that one day they do become that, right? And, but I think it'll be the U.S. coming up with its own cryptocurrency, right? And that's the one we'll adopt. I don't think it'll be the one that's outside of the law, right? I don't know if they'll ban it, but they'll definitely highly regulate it where anybody that's trading it will, I think it'll be a too much of a problem to keep, right? And I think that market will crash again as well, right? Markets go up, markets go down, right? So, but either way, that's not going to change my investment strategy. So say, your investment strategy is going to have a percentage of your portfolio that you speculate on, right? That are things that are not in that, what you call unicorn status, right? So if you want to use that percentage of your investment strategy to invest in Bitcoin or invest in other things, then all power to you, right? But for me, I want to be financially free, right? And I want to guarantee financial freedom. I don't want to be losing a bunch of money. I don't want to be selling at the bottom and buying at the top, right? So that's why I do the investment strategy that I do, and I call it the unicorn strategy, but nobody else calls it that. That's just what I call it. But basically, you're looking for a unicorn, and you're looking for something that nobody's found yet, which is very difficult, right? Obviously, if it's obvious, then it's too late, right? So, but you can do it in less than 20 minutes a day trying to find it, right? So with the help of screeners and all kinds of stuff, software basically finds it for you now, and it's easy. You actually find more unicorns than you can invest in, right? And you're actually trying to choose which unicorn is the best, right? So let's keep that in mind, guys. So basically the point of the video is that no matter what the news is telling you, no matter what the, people in your ear are telling you, bringing you things, whatever your investment strategy is, that's the investment strategy to keep, right? I personally follow, one of the greatest of all times to do the strategy, and that's Warren Buffett. And, people were calling him an idiot in 19, 20, 21, but he ended up on top, and all those people that, were speculators ended up losing all their money, right? So just keep that in mind. Don't speculate on things. Be an investor, not a speculator. I'm Nate. I'm the Fit Future MD. Share this video with somebody that needs it. Like, comment, and subscribe. Shop at insercell.com. Check out the Difference Maker drop that's out now. And we'll see you in the next piece.